20-odd%. So just wanted to put a couple of points on board when it comes to Persistent and what we should watch out in their numbers. Girish Pai, the head of research at Nirmal Bang Institutional Equities, is now with us, and he's a close watcher, very close watcher of IT. And you've been negative on IT now for close to about a year. I remember your first downgrade had come out in April of last year, or was it even before that?
Yeah, it was in April of last year.
Last year, right? And you know, that call has worked perfectly for you. But now we've started to see that IT companies are outperforming. The Q3 numbers are not as bad as what the street was fearing. Is it time to take a step back from your negativity, the extent of negativity that you had on IT? Your thoughts on what we made, the picture so far?
Firstly, thank you, Rima, for having me on your show. So I would continue to be cautious on the IT services space from a 12-month perspective. I think what's probably giving a leg up from a stock performance perspective for the IT services stocks is one, obviously, they've been down about 26-27% in calendar year 2022. And they appear to be cheap, but my sense is that in FY24, the consensus numbers will have to be pulled down. And my own sense is that the PE multiples will also contract. Now, very specifically near term, I think that there are some positive data points coming through, especially on the US macro side. So when I put out my report in early April 2022, I was anticipating that US macro will kind of deteriorate by now. And that has not happened. US macro has been fairly resilient, largely on the back of US consumption, which has been fairly strong and looks like it's going to continue at least for the next couple of quarters. So my assumption, and it's an explicit assumption of a shallow recession, is probably going to be pushed back towards the middle of 2023 or maybe second half of calendar year 2023. That's when probably, so when probably we'll see the pain kind of come through. My sense is that between now and that particular time frame, the stocks can go up and down. But I think the worst is not behind us, worst is ahead of us. But of course, there has been some bullish commentary coming out of at least some of the CEOs in Davos, for instance, kind of indicating that we're probably going to go into a soft landing and stuff like that. My own take is that we'll have to probably wait. And if you do go into even a shallow recession, I would sense that the earnings will have to be pulled down for the entire sector, and especially for the tier 2 stocks.
Okay. Girish, hi, good morning, and hope you have a great 2023. I wanted your thoughts on, a conversation that we just heard a while back from TVS Motor, where they are really aggressive in the electric vehicle space. They're already the top player over there in EV two-wheelers, and now there are big plans, expansion plans. In this entire, electric vehicle basket, electrification, autonomous vehicles, what is it that you like from a long-term investor standpoint?
It's very early, Sonia, to take a call on who's going to be a winner here. I think it's very early days in this space. A lot of people have taken bets. I think each individual auto player has taken a bet on this. Some of them actually taken on board some external investors too. So as we look at it, we like TVS and also we like Hero MotoCorp for different reasons. In the two-wheeler space, while we think that growth has been a bit challenging on the two-wheeler side on an aggregate basis compared to the passenger car market, I would say on the EV side, Hero MotoCorp seems to be having a hedged policy where they're kind of betting on Ather, they're betting on their own product Vida, then they're probably trying to do some kind of a partnership with Gogoro, for instance. On TVS, I think they also seem to have their own set of strategies on the EV side. We like both. We like Hero MotoCorp because I think valuations are fairly inexpensive. It's probably going at about 14-15 times FY24 earnings, whereas TVS is probably going at 25 times earnings. But TVS, I think, probably has things going for it in one sense. If you look at the last 2-3 years, it's probably been the only two-wheeler which is actually seeing margin expansion, whereas the other two have actually seen some kind of margin compression. And probably it's been the company which is invested in technology the most, and it's come out with good products. So we would bet on both. One is from a valuation perspective, and probably, I'm talking of Hero MotoCorp, and probably a turnaround in the rural side, which is probably going to be supported by spending by the government in calendar year 2023 or FY24 because of impending elections in May of 2024. So broadly, I would say that's where we kind of, that's how we're probably approaching the two-wheeler, these two players in the two-wheeler market.
All right, that is on the two-wheelers. Girish, something we have been talking about for the past few days is that with the budget, just around 10 days away now, we normally see this big capex push, right, in the budget. So do you think this is a good time to be looking at some of the metal names, the cement companies, the infra companies as well? Do you think that this would be a good time to put some fresh money here?
Yeah, so I would say at least that is our expectation that there is going to be a further capex push. We're kind of building in about 15% higher capex in FY24 compared to FY23. So whereas we think that revenue expenditure is probably going to grow in that 7-8% territory. So we do think that government will continue to spend. The beneficiaries of that will probably be road construction players, cement players. Broadly, I would say those are the investable universe of stocks that we kind of covering right now. I wouldn't want to comment on metals. Obviously, metals is more a China play as we speak right now. And obviously with China opening up post its, putting aside its zero COVID policy, probably that space is kind of benefiting. On the cement side, I would think that, there is going to be margin expansion. Now, the extent of margin expansion is something that is questionable as we speak. Because with China opening up, I would probably think that the industrial commodities will also kind of move up, and they've been moving up. So the extent of margin expansion, not just for cement, I think a lot of domestic focused sectors which are in consumer, auto, cement, and quite a few others where people are building in fair bit of margin expansion FY24 versus 23. I'm not sure how much of that is going to come out as actual in actual terms in FY24. But cement is a space, construction, where we kind of bullish on KNR and PNC. Those are areas where we would kind of put our money to work.
Girish, thank you very much for joining in. I remember even Rahul Arora yesterday was telling us that how you guys are betting on cement, PNC, infra, etc. Thank you very much for joining in. As we slip into a very short break, here is an important piece of information for all our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.
Three S? Ye 3S